In this video, we will break down 5 powerful software stocks that could help you retire early if their businesses continue compounding the way they have over the past decade. These are not speculative tech names chasing the latest trend. These are companies that sit at the center of massive digital ecosystems. Their platforms are deeply embedded in how businesses advertise, sell, automate workflows, and manage customer relationships. The type of businesses that quietly become more valuable every single year as the world becomes more digital. Some dominate digital advertising infrastructure, others run the operating systems of modern enterprises, and a few are becoming the backbone of how companies acquire and retain customers. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Let us start with the first company, The Trade Desk, ticker symbol TTD. The reason this company matters is simple. Digital advertising is one of the largest and fastest growing industries in the world, and The Trade Desk sits right in the middle of it. Most people see ads on websites, streaming platforms, or mobile apps and do not think twice about the complex technology that decides which ad you see, how much the advertiser pays, and whether that ad performs well. But behind the scenes, billions of advertising decisions are being made every second. The Trade Desk provides the technology platform that allows advertisers to buy digital advertising across the open internet in a highly automated and data-driven way. Think of it as the command center for advertisers. Instead of manually negotiating ad placements with individual websites, companies can use the Trade Desk platform to buy advertising across thousands of publishers instantly. The platform analyzes massive amounts of data to determine where ads should appear, how much advertisers should bid, and how campaigns should be optimized in real time. This is called programmatic advertising, and programmatic advertising has completely transformed how digital ads are bought and sold. One of the most important competitive advantages the Trade Desk has is that it operates on the buy side of advertising. That means it works for advertisers, not for publishers. This independence is extremely valuable in an industry where many large platforms control both sides of the marketplace. Advertisers want transparency. They want to know where their ads are going, how much they are paying, and whether those ads are generating results. The Trade Desk built its reputation by focusing on exactly that. Over time, that trust has allowed the company to attract some of the largest brands in the world to its platform. But the real long-term opportunity here goes far beyond traditional digital advertising. One of the biggest shifts happening right now is the rise of connected TV. As more people move away from traditional cable television and towards streaming platforms, advertising budgets are following that audience. Connected TV advertising is still in the early stages, but it is already becoming one of the fastest-growing segments of digital marketing. Instead of buying television ads months in advance, advertisers can now buy streaming ads programmatically and target specific audiences with far greater precision. The Trade Desk is one of the leading platforms enabling that shift. Its technology allows advertisers to buy ads across a growing network of streaming services and connected TV platforms while using sophisticated data to improve targeting and campaign performance. As streaming becomes the dominant way people consume television, the amount of advertising flowing through programmatic platforms is expected to increase dramatically. Another important growth driver is retail media. Retailers are increasingly monetizing their own data and digital properties by offering advertising opportunities to brands. Companies want to promote products directly to shoppers while they are browsing online stores or mobile apps. The Trade Desk platform allows advertisers to access many of these retail media networks through a unified interface. That makes campaign management far more efficient for large brands that need to coordinate advertising across many different platforms. Now let us talk about the financial side of the business. The Trade Desk has built a reputation as one of the most consistently growing companies in the digital advertising space. The company has delivered strong revenue growth for many years as advertisers shift budgets toward programmatic channels. At the same time, it has managed to maintain strong profitability, which is relatively rare among high-growth software companies. Its business model is highly scalable. Once the technology infrastructure is built, additional advertising volume flowing through the platform can generate significant incremental margins. Another impressive characteristic of the business is customer retention. Large advertisers that integrate the Trade Desk into their marketing operations tend to stay on the platform for years because switching would require significant changes to how their advertising systems work. That creates a powerful form of customer lock-in. The company is also investing heavily in new identity solutions designed to help advertisers navigate a future where traditional tracking cookies are disappearing. Its Unified ID initiative aims to create a more transparent and privacy-focused way for advertisers and publishers to identify audiences across the open internet. If that system continues gaining adoption, it could strengthen the trade desk's role as a key infrastructure provider for the digital advertising ecosystem. When you combine strong industry tailwinds, a highly scalable platform, deep advertiser relationships, and long-run growth opportunities in connected TV and retail media, it becomes easier to understand why many investors believe the trade desk could remain a dominant force in digital advertising for years to come. And that type of durable growth platform is exactly the kind of business that can quietly compound investor wealth over long periods of time. This video is brought to you by Value Stocks Investing Master Course. If you are looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let us move on to the second company, ServiceNow, ticker symbol NOW. ServiceNow is one of those businesses that most consumers never interact with directly, yet it plays a critical role inside thousands of large organizations around the world. At its core, ServiceNow provides cloud software that helps companies manage digital workflows. That may sound simple, but in reality, it is incredibly powerful. Large enterprises run thousands of internal processes every day. Employee onboarding, IT support tickets, security approvals, procurement requests, and countless other tasks. Historically, many of these workflows were handled through email chains, spreadsheets, or disconnected internal systems. The result was inefficiency, delays, and poor visibility into how work was actually getting done. ServiceNow built a platform that allows organizations to digitize and automate these workflows inside a single system. Instead of manually routing requests between departments, the platform automatically directs tasks to the right teams, tracks progress, and ensures that work moves through the organization efficiently. Over time, ServiceNow expanded far beyond basic IT service management. The platform now supports a wide range of enterprise functions, including human resources, customer service operations, security management, and even complex industry-specific workflows. What makes this business particularly powerful is that once a company starts building workflows on the ServiceNow platform, the software becomes deeply embedded in how that organization operates. Replacing it would require rebuilding hundreds or even thousands of internal processes. That creates a very strong switching cost. It is one of the reasons ServiceNow enjoys extremely high customer retention rates and continues expanding its relationships with existing clients. Many organizations start by using ServiceNow for a single function, such as IT service management, but once they see the efficiency improvements, they often begin adding additional modules across the enterprise. That expansion strategy has helped ServiceNow grow into one of the most important enterprise software platforms in the world, and the financial performance reflects that momentum. ServiceNow has delivered impressive revenue growth as companies continue migrating internal operations to cloud-based platforms. Its subscription-based model generates predictable recurring revenue, which investors tend to value highly because it provides visibility into future cash flows. Another key advantage is the size of the market opportunity. Enterprises around the world are still in the early stages of digital transformation. Many organizations are trying to modernize outdated internal systems and automate processes that have remained inefficient for decades. ServiceNow sits right at the center of that transformation. The more companies digitize their operations, the more valuable workflow automation platforms become. In addition, the company is integrating artificial intelligence capabilities into its platform to further improve productivity and decision-making. AI can analyze workflow data, identify bottlenecks, and recommend ways to optimize processes across the organization. This type of intelligent automation could significantly increase the value of the platform for large enterprises. When you combine deep enterprise integration, strong switching costs, recurring subscription revenue, and long-term demand for workflow automation, ServiceNow begins to look like exactly the type of software platform that can compound revenue and profits for many years. And those are precisely the types of businesses that long-term investors often look for when building wealth in the stock market. Now let us move on to the third company, AppLovin, ticker symbol APP. AppLovin is one of the most fascinating software businesses to emerge from the mobile economy over the past decade. At first glance, many investors assume this is simply another mobile advertising company, but that description misses the real story. What AppLovin has built is a powerful software platform that helps mobile app developers grow, monetize, and optimize their businesses. The mobile app ecosystem is enormous. Billions of people around the world use mobile apps every day for gaming, shopping, entertainment, social media, and productivity. But building a successful app is extremely difficult. Developers face intense competition for user attention. Even if they create a great product, they still need effective tools to acquire users, keep them engaged, and generate revenue. This is where AppLovin comes in. The company provides a suite of software tools that allow developers to market their apps, analyze user behavior, and maximize monetization. One of the most important components of this ecosystem is AppLovin's advertising and marketing platform. Developers can use the company's technology to run highly targeted advertising campaigns designed to attract users who are most likely to download and engage with their apps. Once those users are inside the app, AppLovin's software helps developers optimize how advertising is displayed and monetized. In other words, the platform helps developers both acquire users and generate revenue from those users. What makes this particularly powerful is the amount of data flowing through the system. With billions of daily interactions across thousands of apps, AppLovin's algorithms continuously learn which advertisements perform best, which users are most valuable, and how to optimize the entire monetization process. Over time, that data advantage can become extremely difficult for competitors to replicate. Another important element of the business is the company's Axon technology platform. Axon is essentially the machine learning engine that powers many of AppLovin's advertising optimization tools. It processes massive amounts of behavioral data to determine which ads should be shown to which users in order to maximize engagement and revenue. For developers, this can dramatically improve the economics of running a mobile app business. Instead of guessing how to monetize users or manually testing different strategies, developers can rely on AppLovin's automated system to optimize results. This type of technology becomes more valuable as the mobile ecosystem grows. There are millions of apps competing for attention, and developers need sophisticated tools to survive in such a crowded marketplace. From a financial perspective, AppLovin has experienced strong growth as its software platform gains adoption across the mobile developer community. A key feature of the business is its ability to scale. As more developers use the platform, the amount of data available to improve advertising performance increases. That creates a feedback loop where better performance attracts more developers, which in turn generates more data and further improves the platform. Investors often refer to this as a data network effect. Another interesting aspect of AppLovin is that it has historically operated some of its own mobile gaming studios. While this may seem unusual for a software platform company, it actually provided valuable insights into how mobile apps are built, marketed, and monetized. Those insights helped the company refine its software tools and better understand the needs of developers. Over time, AppLovin has shifted more of its focus toward becoming a pure software platform, which generally comes with higher margins and more scalable growth. The long-term opportunity here is tied directly to the continued expansion of the global mobile economy. As smartphones become more powerful and mobile internet access expands around the world, the number of apps and mobile users continues to grow. That means more developers competing for attention and more demand for sophisticated marketing and monetization tools. AppLovin is positioning itself as one of the central infrastructure providers for that ecosystem. If the company continues improving its technology and attracting developers to its platform, it could remain a key player in the mobile economy for many years. And once again, that kind of long-term platform growth is exactly what investors look for when searching for companies capable of compounding value over time. Now let us move to the fourth company on this list, Salesforce, ticker symbol CRM. Salesforce is one of the most influential software companies of the modern era. When the company was founded more than 2 decades ago, most businesses still relied on locally installed software systems to manage customer data. These systems were often expensive, difficult to maintain, and poorly integrated with other business tools. Salesforce helped pioneer a completely different model. Instead of installing software on internal servers, companies could access powerful customer relationship management tools directly through the cloud. This model, now known as software as a service, transformed the entire enterprise software industry. Today, Salesforce remains one of the dominant platforms for managing customer relationships, sales pipelines, and marketing operations. The company's core CRM platform allows businesses to track every interaction they have with customers. Sales teams can manage leads, monitor sales opportunities, and forecast revenue. Marketing teams can analyze campaign performance and personalize outreach. Customer service teams can resolve issues and maintain long-term relationships. All of this data is stored within a unified system that provides a complete view of each customer. That level of integration is extremely valuable for modern businesses. Companies today interact with customers across many different channels, including websites, mobile apps, social media, email, and physical stores. Without a centralized system, managing those relationships would quickly become chaotic. Salesforce provides the digital backbone that allows companies to organize and analyze all of that information. But the company did not stop at customer relationship management. Over the years, Salesforce has expanded its platform into many adjacent areas, including marketing automation, analytics, e-commerce tools, and application development. Through both internal innovation and strategic acquisitions, the company has built a broad ecosystem of enterprise software solutions. One particularly important addition to the Salesforce platform has been its data and analytics capabilities. Businesses are collecting enormous amounts of customer data, but that information is only valuable if companies can analyze it effectively. Salesforce's analytics tools allow organizations to turn raw data into actionable insights that improve sales strategies, marketing campaigns, and customer experiences. Another major area of focus for Salesforce is artificial intelligence. The company has been integrating AI features across its platform to help businesses automate tasks, analyze data, and improve decision-making. AI-powered tools can assist sales teams by identifying promising leads, recommending next actions, and forecasting customer behavior. For marketing teams, AI can personalize campaigns and optimize messaging across different channels. And for customer service operations, AI systems can help resolve issues faster by analyzing historical support data. All of these capabilities increase the value of the Salesforce platform for enterprise customers. Once a company integrates Salesforce deeply into its operations, switching to another system becomes extremely difficult. Customer data, sales processes, marketing workflows, and internal integrations are all built around the platform. This creates a strong competitive moat based on switching costs. From a financial perspective, Salesforce has grown into one of the largest enterprise software companies in the world. Its subscription-based model generates recurring revenue from thousands of corporate clients across many industries. Even though the company has already reached massive scale, the long-term growth opportunity remains significant. Businesses continue investing heavily in digital tools that help them manage customer relationships and extract insights from data. Salesforce sits directly at the center of that transformation. As companies place increasing importance on understanding their customers and delivering personalized experiences, platforms like Salesforce become even more critical. For long-term investors, the key question is whether the company can continue expanding its ecosystem and increasing the value it provides to enterprise clients. If it succeeds, Salesforce could remain one of the most important software platforms in the global economy for many years, and businesses with that level of strategic importance often have the ability to compound revenue and profits over very long periods of time. Now let us move on to the fifth and final company on this list, HubSpot, ticker symbol HUBS. HubSpot represents one of the most interesting long-term opportunities in the software industry because of how it positioned itself in the market. While many enterprise software giants focused primarily on large corporations, HubSpot built its platform specifically for small and medium-sized businesses, and that decision turned out to be extremely powerful. Small and medium-sized companies make up a massive portion of the global economy. Millions of businesses need tools to attract customers, manage relationships, run marketing campaigns, and track sales performance. But historically, many of these companies did not have access to the sophisticated software used by large enterprises. Traditional CRM and marketing automation platforms were often expensive, complex, and difficult to implement. HubSpot saw an opportunity to change that. The company created a cloud-based platform designed to help growing businesses manage their entire customer journey from a single system. At its core, HubSpot provides tools for marketing, sales, customer service, and content management. What makes the platform particularly attractive is how these tools are integrated. A business can attract potential customers through marketing campaigns, convert those prospects into leads, track them through the sales process, and provide ongoing support after the sale, all within the same ecosystem. That unified approach simplifies operations for smaller businesses that do not have large IT departments or complex technology stacks. But the real strategic insight behind HubSpot's success is its focus on inbound marketing. Inbound marketing revolves around attracting customers by providing valuable content and experiences, rather than interrupting them with traditional advertising. For example, companies may create blog articles, educational resources, social media content, or email newsletters designed to build trust with potential customers. HubSpot built its software around this philosophy. The platform helps businesses create content, optimize websites for search engines, capture leads, nurture those leads through automated marketing campaigns, and track the entire process using analytics. In other words, it helps companies build long-term customer relationships rather than simply chasing short-term sales. Over time, this approach proved extremely effective. As more businesses embraced digital marketing strategies, HubSpot's tools became essential infrastructure for managing those campaigns. Another important element of the business is its modular platform structure. HubSpot offers several core software hubs including marketing, sales, service, content management, and operations. Companies can start with a single hub and gradually expand into additional products as their needs grow. This creates a natural expansion pathway that increases customer lifetime value. A small startup might begin with basic marketing automation tools. As the business grows, it may add CRM functionality, sales automation, customer support tools, and advanced analytics. Because all of these capabilities are built into the same ecosystem, the platform becomes increasingly valuable over time. That integration also creates switching costs. Once a company manages its marketing campaigns, sales pipeline, customer communications, and website content inside HubSpot, migrating to another platform would require significant effort. From a financial perspective, HubSpot has delivered impressive long-term growth as more businesses adopt digital marketing and customer relationship tools. Its subscription-based model generates recurring revenue from a large and expanding customer base. Another advantage is the global nature of the opportunity. Small and medium-sized businesses exist in every country, and many of them are still in the early stages of digital transformation. As these companies modernize their marketing and sales processes, demand for platforms like HubSpot continues to grow. The company has also been expanding its capabilities through artificial intelligence and advanced analytics. AI-powered tools can help businesses generate marketing content, analyze customer behavior, and automate repetitive tasks. For small companies with limited resources, these features can dramatically increase productivity. Instead of hiring large marketing teams or data analysts, businesses can rely on software to handle many of those functions. This democratization of powerful business tools is one of the key trends shaping the future of the software industry. Platforms that allow smaller companies to operate with the efficiency of much larger organizations are likely to see strong demand for many years. HubSpot sits directly at the intersection of several powerful trends: digital marketing adoption, cloud-based software, data-driven customer engagement, and the rapid growth of small and medium-sized businesses around the world. When you combine these forces with a highly integrated platform and strong customer retention, HubSpot begins to look like another potential long-term compounder. And when investors talk about stocks that could help them retire early, these are the kinds of businesses they usually have in mind. Companies that serve large and growing markets. Companies with strong competitive advantages. Companies that generate recurring revenue and become deeply embedded in the operations of their customers. Across this entire list, you can see a common theme. The trade desk dominates a critical layer of the digital advertising ecosystem. ServiceNow powers the workflows that keep modern enterprises running. AppLovin provides the infrastructure that helps mobile apps acquire and monetize users. Salesforce manages customer relationships and data for businesses around the world. And HubSpot gives growing companies the tools they need to attract and retain customers in the digital economy. Each of these platforms plays a unique role in the global software landscape. More importantly, each of them benefits from long-term structural trends that are likely to continue shaping the economy for many years. The world is becoming more digital. Businesses are relying more heavily on software to run their operations, reach customers, and analyze data. And the companies providing those critical tools often become extremely valuable over time. Of course, no stock is guaranteed to make investors wealthy. Markets move in cycles, technology evolves, competition always exists. But historically, investors who identify strong businesses with durable advantages and hold them for long periods have often seen remarkable results. Software companies in particular have produced some of the most powerful compounding stories in the market over the past several decades. Their products can scale globally with relatively low marginal costs. Their subscription models generate predictable recurring revenue, and their platforms often become deeply integrated into the operations of their customers. All of these characteristics can create the kind of long-term value creation that patient investors look for. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now here is a question for you. Which of these companies do you believe has the strongest long-term competitive advantage? Is it The Trade Desk with its position in programmatic advertising, ServiceNow with its deep enterprise workflow integration, AppLovin with its data-driven mobile advertising platform, Salesforce with its massive CRM ecosystem, or HubSpot with its powerful tools for growing businesses? Let me know your thoughts in the comments because it is always interesting to see which companies investors believe have the best long-term potential. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.